All right, turning back to the markets, we're watching shares of Berkshire Hathaway this morning on the back of the conglomerate's latest quarterly results over the weekend after hitting a 52-week high on Friday. Operating earnings jumping 28% in the fourth quarter from a year ago to nearly $8.5 billion, boosted in large part by the company's insurance business. Warren Buffett often speaks glowingly about Geico. Berkshire also reporting it's sitting on a record cash pile of nearly $168 billion. Touching on that cash pile in his annual letter to shareholders, CEO Warren Buffett saying there are no attractively priced acquisition targets, at least not right now. Buffett adding that Berkshire will be ready to swoop in and put that money to work whenever the casino-like stock market seizes up. For much more, let's bring in Barbara Goodstein, managing partner at R360, a community for centimillionaires. Might be a term you're not familiar with. We're going to explain it to you. It's a community with 100 members who have more than $40 billion in assets, and that includes, of course, stakes in Berkshire Hathaway. Barbara, great to have you here. Good morning.
Good morning.
I hate to start on a down note, but first quarter without Charlie Munger. Did that influence your view of this quarter at all? Does it influence your view of the stock going forward?
So we actually thought that the stock was in solid position, and that was the goal. That's what Charlie Munger and Warren Buffett built. They built a stock that was resilient, and they built it for succession planning. So we had anticipated no major hiccups, and I think that we were correct. It performed as expected.
Yeah, really strong quarter for Berkshire Hathaway, sitting at a 52-week high. We got to talk about this cash pile. $168 billion. That's a lot of money. Just to put that in perspective, I looked this up. Apple, another company known to hold on to its cash, they have about $40 billion. So, I mean, a big difference there. You actually think that's a good thing. You said that aligns with you and the rest of the R360 community. Why, though? Why not have that money to work out in the market? I know Buffett called it casino-like, but are you guys worried that the company's missing out on some huge gains?
So I think the missing out is a risk. What you want to do is sit tight and wait for the best opportunity. Warren Buffett is a value investor, and many of our members are value investors. We have two of the top value investors. They meet with Warren Buffett. They used to meet with Charlie Munger. Right. This is a strategy, and that means you have to sit tight, you have to be patient, and all of that cash means you have financial resilience, that you can do what you need to do, even in a worst-case scenario.
All right, Buffett was one of the first people to talk about Japan, made a big bet on Japan, actually announced it here on CNBC. What do you guys think about this Japan investment? Do you feel like there's more room to run? He called the stock market casino-like, but he did put some money into at least the Japanese markets.
So Japan is consistent with all of his other investments. It's a value investment. He's looking for opportunities for something that's undervalued that has long-term growth potential. And long-term growth potential is our focus. Our members don't need the money in the short term because they've been incredibly successful. So they're looking for something that has long-term upside so that they can pass it on to future generations. And that's what Warren Buffett does.
So I want to ask you about just Berkshire Hathaway being the conglomerate it is. So many different businesses, a railroad with BNSF, obviously an insurance business, big investments in other companies. Are you worried going forward that this company is going to suffer what a lot of people call a conglomerate discount? I often talk to Brad Jacobs, the chairman of XPO and GXO, and he says he broke up all those companies from one company because he felt like the company was trading at a discount. Are you worried here when it comes to Berkshire Hathaway, especially when you look at BNSF? And I mean, I'm looking right here, full year earnings down 14% year over year.
Well, that's why Warren Buffett is particularly diversified. So he's looking at companies in different sectors, and he's now looking at companies in different countries. So he's diversifying within his own portfolio, and we're not worried. We have great confidence in this stock, and we have great confidence in him, which is why we use this stock and pass it on from generation to generation. We're not focused on short-term earnings. We're looking at what's going to happen for the long term.
Hard to argue with people that have billions of dollars. Barbara, really great to see you. Thanks for coming in today. You have a good day. All right.